President Trump has criticised Fed Reserve Chair Jerome Powell, calling him a numbskull and suggesting he will be replaced in 8 months.
I think he's done a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out. But I call him too late. He's too late all the time. He should have lowered interest rates many times. Europe lowered their rate 10 times. We lowered ours none. And it's causing a problem for people that want to buy a home. Look, our economy is so strong now, we're blowing through everything. We're setting records. You know that, you see that. And whether it's the Philippines or anyone else, we're setting records at levels that nobody's ever seen before. But you know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high and probably doing it for political reasons. The only time I remember him cutting rates, I mean, he cut the rates just before the election to try and help Kamala.
All right, a numbskull, sticks and stones. To unpack it all, we're joined by market analyst David Scutt from StoneX. Great to see you. What do you make of this one?
Well, what do we make of it, Aaron? Good to be back. A continuation of a pattern that's been going not only during Trump's second term as president, but in his first term as well. It just keeps evolving, and numbskull is probably taking it to a next level. But the broader call for him to go and quit is something that's been a permanent feature of Trump's presidencies.
Now, just because you want him gone, or just because the president wants to see lower interest rates, I think every leader around the world wants to see that as well, doesn't mean it will happen.
Absolutely. And I would go and point that the US is running a structural deficit of about 6% of GDP. So when Trump's talking about the records that are being set, of course, this is a continuation of the pattern that we saw when the Democrats were in power. I think a lot of that exceptionalism that's coming through is a result of the fact that we're seeing these huge deficits helping to go and juice activity. And that's also making the Fed nervous and cautious about going and cutting rates, even before we go and start talking about the other tariff side of the equation.
Trump would know all this, so wouldn't he? I mean, he's a smart man. He knows how things work. He knows that if he wants to lower rates, there are policy levers that he can pull, but he's been doing the opposite because we know that obviously higher costs through tariffs mean higher rates.
Absolutely. And I'm sure that he does know, and I'm sure that Scott Bessent, the Treasury Secretary, if he didn't know, is telling him that already. But their grand planning, it's interesting that he mentioned the fact about home ownership and being able to go and afford a home. The reason that we have these deficits is also flowing through to the longer end of the Treasury market. 10-year yields at the moment around about 4.5%, a little bit lower today. But when you go and look at that, that's a big factor. That's flowing through to mortgage rates, 30-year rates in the United States as well. So it comes back to what can the Fed go and control? Well, the Fed can go and really control the immediate overnight rate, and then maybe go and manipulate some parts of the interest rate curve. But who can go and control what's happening at the back end of the curve where mortgage rates are set off? That's the government.
Some really interesting viewpoints on this. On the one hand, you've got those who believe that the president is wrong and that Jerome Powell should remain independent, stay there, do his best, know that the term probably isn't going to be renewed. Others say, watching CNN this morning, that in fact we need to see Jerome Powell resign as a way to keep the institution safe. What's your view?
Look, one way or another, he is gone in 8 months. His term as chair ends in May next year. He was on the board of governors beforehand, and his term for that doesn't actually expire until early 2028. But right now, all the talk is about, no, should he go early? Look, I probably would go and say, when it comes to being too late, it probably is the case. So when you saw when inflation started to go and rear its head back in 2021, 2022, the Fed was still saying it was transitory. That was a big mistake. But at the same time, he wasn't the only person. The Fed wasn't the only central bank as well to make that mistake. So it's kind of a balancing act here. I can see why he's being called too late. I can see why the calls are there. But if you said that, then you should be saying it to every other single policymaker from the monetary policy space across the world at the moment, bar maybe New Zealand.
Let's be a bit positive now. The S&P 500 just hit a new high. Is this a sign of strength, or do you think the market's running on fumes?
Look, it's interesting what's going on at the moment. It is summer in the Northern Hemisphere, and it's notorious for having light volumes and drifting higher before the adults come back into the room, and of course, when summer is over. But at the moment, you look at what's going on with earnings, in particular, when you look at what's going on with tech earnings, and we know that there's still a lot of optimism priced in about earnings growth in those tech giants. That's really the big behemoth that's helping you go and plow this market higher. At the same time, you also have markets that are still flirting with the idea of at least a couple of rate cuts from the Fed this year. The longer we go down this path, though, of course, we're sitting in July, late July, to two cuts, given uncertainty about the inflation outlook as well. Look, that's also been a factor. I'm not sure the market's going to go and get what it wants, though, without some kind of calamity, and that will not be good for stocks. But for the time being, lots of high hopes, particularly around tech earnings.
We've seen GM, Philip Morris, Lockheed Martin. What about their earnings?
Look, when you look across some of them, there's clearly an impact coming through in some spaces when it comes to tariffs. There's also pockets of weakness in the consumer at this point in time. But yet again, it's still not enough to go and derail the belief of what we're seeing at the moment in these markets. And when you go and strip back and you step back from what's going on with the earnings picture, another big factor that a lot of people are not talking about at this point in time is that there's really big retail participation, particularly in retail options markets. And that's contributing to this continued melt up that we're seeing at the moment. Lots and lots of call options being bought at the moment. And as the market continues to go and move higher, that's forcing those option writers to go and buy that underlying stock. That's another factor that not a lot of people are talking about, but it is undeniably contributing to this melt up that we're seeing across not only US markets, but elsewhere, including here in Australia.
All right, David Scutt from StoneX. Appreciate your insights as always. Talk soon.
Always great to be here. Take care.